Welcome to The Explainer, where we break down the complex stories behind the headlines. Today, we're tackling a big one, Michael Saylor, one of the most talked about figures in the entire crypto space. You probably remember this. Back in August 2022, the headlines were everywhere when Michael Saylor stepped down as CEO of MicroStrategy. And the story everyone was telling was simple and it was dramatic. His massive bet on Bitcoin had backfired big time. So is that the whole story? Today, we're going to dive deep into Saylor's own accounts of what went down. We'll look at what he was saying at the time and see how it stacks up against those big, splashy headlines. All right, first up, let's just clearly lay out the claim that absolutely dominated the news cycle. This idea that the whole Bitcoin strategy was a complete and utter disaster. The narrative was pretty straightforward and honestly pretty brutal. It went like this. The company bet the farm on Bitcoin, the crypto market crashed, and they were suddenly sitting on these huge paper losses. And yeah, that just means the value of their holdings went down, not that they actually sold anything. And as a result, Saylor was shown the door. It's a clean story, for sure, but is it the true one? Okay, this is where it gets really, really interesting, because when you stop listening to the chatter and start looking at the actual data that Saylor was presenting, well, it paints a radically different picture. So just take a look at this. Since MicroStrategy first started buying Bitcoin back in August 2020, their stock, MSTR, soared by an incredible 166%. Now compare that to the broader market. The S&P 500 was up a respectable 23%, and the tech-heavy Nasdaq was up 12%. I mean, it's not even in the same ballpark. And it gets even wilder when you put them up against the absolute giants of the tech world. In that exact same period, MicroStrategy didn't just keep pace, it blew right past Google, Apple, and Microsoft. And Amazon and Meta, they were actually down. It's kind of stunning. What about in their own backyard, the enterprise software industry? Well, it's the same story. The contrast is just night and day. Compared to legacy players like Oracle, IBM, and SAP, MicroStrategy's growth wasn't just a little better. They were playing a completely different game. So here's the real kicker. During the exact period his strategy was being called a failure, MicroStrategy's stock actually outperformed 97% of all the companies in the S&P 500. Now, to be fair, this ride was anything but smooth. It was extremely volatile, and those massive paper losses during the downturns were enough to make any conventional investor's stomach churn, which is exactly what fueled that media narrative. Which, of course, brings us to the million-dollar question. If the numbers were this good, why on earth would the guy behind the strategy step down as CEO? It just doesn't add up with the story we were all being told. So let's take a look at what was really going on. Was this an exit, or was it actually the next phase of an even bigger plan? Well, according to Saylor, he wasn't pushed out at all. He stepped up into a new role as executive chairman. This wasn't a demotion, it was a calculated move so he could focus 100% on what he cared about most, the Bitcoin strategy and being its biggest advocate. He handed the keys to the day-to-day software business to his trusted president, he kept his controlling 68% stake in the company, and he said this was a transition they'd been planning for 7 years. To really get why he'd make a move like this, you have to understand his fundamental philosophy, how he thinks about money and value in our modern world. Saylor has this fantastic analogy. He says holding cash is like standing on the deck of a slowly sinking ship. Because of inflation, you know for a fact that your purchasing power is going down over time. It's a guaranteed loss. Bitcoin, he says, is a lifeboat. Is it volatile? Heck yeah. It gets tossed all over the place, but ultimately it keeps you afloat. And he takes that idea even further. He's famous for saying that Bitcoin is 1,000,000 times better than gold. His argument is pretty straightforward. In the 21st century, a digital asset you can zap anywhere in the world at the speed of light is just fundamentally superior to a heavy physical metal. Okay, but what about that insane volatility? You know, the wild price swings that scare so many people away from crypto. Well, Saylor has a very clear framework for dealing with that. His key piece of advice is this. Bitcoin is for investors, not for speculators. You have to have a time horizon of at least 4 years. That's his magic number. It gives you enough time to ride out the noise, see past the daily drama, and actually appreciate its natural market cycles. And for anyone who wants to get in on it, he recommends a really simple discipline technique called dollar cost averaging.
Basically, instead of trying to be a genius and time the market, which is pretty much impossible, you just buy a fixed dollar amount on a regular schedule. Every week, every month, no matter the price. Sometimes you'll buy high, sometimes you'll buy low. But over the long run, it all averages out and smooths out those crazy bumps. So when you put all the pieces together, Saylor's big move wasn't about admitting defeat at all. It was about doubling down on his long-term conviction right in the face of all that short-term criticism. This quote right here, it gets to the absolute heart of his philosophy. He's basically saying that playing it safe with cash is actually the real losing strategy because it's guaranteed to lose its value over time. He would much rather take on the volatility for a shot at a huge long-term win. And that really leaves us with a final thought, doesn't it? In a world where everything feels so uncertain, what is the true definition of risk? Is it the choppy lifeboat that could take you to safety? Or is it the big ship that you know is slowly but surely sinking?